messages. Hey Greg, how's it going? Yeah, I'm having a mentoring session with Jade right now, one of our new members. I'm just waiting for her to get on the Zoom call, but yeah, man. Hopefully you guys got out of that US 30 trade. I got out at TP1, so my profits were, pretty nice when I got out. Luckily, because it did spike up. It looked like, yeah, I had about, let's see, I had like about 213 for my personal account on a small, just a small lot size, the smallest lot size, 0.01. My other premium had about, or no, my FTMO got about 3,000, and my other one as well, a little higher, closer to 3,000. This one got 2,987, and this one got 2,970. So perfect. I locked in maybe about, let me do the math on that. Jade's on her way right now, so she should be good. So we locked in a pretty decent amount of profit on that specific US 30, just a TP1. Let's see, 298726 plus 297006. Wow, so I locked in almost like 6,000 today with my combined FTMO and personal. So that's pretty good. 6,000 just one day. That's yeah, it's not bad at all. Oh, you're still in it, Greg. So the reason why it spiked up, I only know this because someone else asked me, like, why did it spike up? It was because there was news. There was COVID stuff, obviously, unfortunately, stuff like that just happens randomly where they pass the extension for the stimulus. So, obviously, if the stimulus comes out, it's going to affect US 30 and spike it upward. So that's kind of what happened there. So it looks like it's going to come back down because the spike up was just because of that stimulus. So hopefully it comes back down if you still have it open. It's about 12, market closes in about an hour. So yeah, you might see a huge spike down, and then even so tomorrow on Sunday when the market reopens, you might see it spike down even further as the news starts to spread even further, because this news thing just came out not that long ago, maybe like an hour ago or less than an hour ago. So they have this little extension, but yeah, it's a lot of money they're going to be printing. 1.4 trillion. That's crazy. The US dollar is going to get very weak from that point as well. So, we'll see how that plays out. We won't really know until, on right here as well, Biden and Harris are starting to introduce key cabinet and administration picks. So you're going to see the market get a little crazy probably towards the end. So maybe it might drop down, Greg, because it is starting to drop down now as we talk. Yeah, I would hang on as well because everything is pointing downwards. So, It just sucks when the news affects it like that, right? It's like spikes it up real quick and you don't even know what's going to go on. But all right, so Jade's here. I'm going to let Jade in.
Hey, Shawn.
Hey, Jade, how's it going?
Good. How are you?
Doing pretty good. Did you take that US 30 trade this morning?
I missed it actually.
It actually might have been a good thing if you did because, or if you did or you didn't, because it ended up spiking up. There was like some news this morning. I was just talking to some of the other members about it, where they were passing like the new stimulus. So if you saw the trade, like we were like super deep in profit, and then over the last 30 minutes to an hour, it just spiked up like crazy right here.
Oh, wow.
Yeah. So it could have been a good or a bad thing that you took it or didn't take it, because if you didn't move your stop loss to like TP1, you probably would have gotten caught in this crazy move.
Right.
Yeah,
Right.
definitely.
Yep. Definitely missed it this morning. I saw after. I think I saw it maybe like probably like around like maybe like an hour later. I saw it. I was like, oh, I missed it. Oh.
It's all good. Friday's not really a good day to trade anyways. I kind of just took it because it was like all the hype this morning. And
Yeah, I usually don't trade on Fridays too much anyway.
yeah, it's a bit too risky.
Yeah. So I did go through the videos for the K2 strategies. So I am just currently a little overwhelmed because there are a lot of strategies.
Yeah, definitely.
But I just want a little bit more clarification. I guess on some of the scalps, because I
Okay,
tend
gotcha.
to like to scalp US 30.
Yeah, definitely. So let's see. So the main one that I use personally would be the pivot strategy. So I don't know if you looked at that one. That's probably my favorite one to use for scalping. I'm going on a clean chart over here so I can
And
just
you
show.
said that you like to do the 10-minute
Yeah,
usually.
I generally like to trade on the 10-minute because the 5-minute is good too because it gives you more entries. But the problem with the 5-minute is that there's a lot of noise on that chart, so you'll
Right.
get a lot of fake outs and stuff like that. So I generally like to trade on the 10, but I mean the sweet spot's the 10, but you can always trade on the 5 or the 15 depending on your type of trading style.
Mm-hmm.
So it just really depends on how you want to trade it. The thing with scalping right now is that obviously you see the market was crazy this week. It wasn't really
Right.
smooth at
Right.
all. You could kind of see like this week it was kind of bouncing around from December 9th up until today. In compared to how the market was moving, say last week and the week before.
Right.
Yeah. So I don't know if you try to scalp this week and maybe ran into some trouble. It looks like there might have been some entries here.
Yeah, I did actually.
Did you? Yeah. Yeah, because the market was so choppy that sometimes it would just move flatly, and then all of a sudden you
Right.
just see these crazy spikes in price.
Yeah.
So those are anomalies. They're not something that happen too often, and you could kind of see it by back testing as well. If you just back test to the previous weeks, previous months, to see how it works. But so let's just go over that strategy. So do you understand all of the requirements, or is there like something that you like specifically need help with?
I think I have a general understanding of the strategy. I know you mentioned, okay, so you talk about pivots. The pivots are the lines that look like EMAs.
Yeah, that's right. Yeah, these right here, these three K2 pivots right here. So basically, they're just EMAs that are like banded as a ribbon. So basically, if they're like spread out and prices below them and they're angling down, then that's going to confirm that price is, generally in a downtrend. And then when it swings above it, that would just indicate that price is in an uptrend. So that's one way to use them. And then another way of doing them as well is if you want to just catch, like, say, if you see a strong downtrend, like something like this right here.
Right.
What I generally do, this is a little more advanced because you have to be able to see it just by looking at it.
Mm-hmm.
But basically, if price was like over here, and then I saw price coming up to retest this, this pivot. Basically, what I would do is I don't teach this in the courses because I don't want people to misinterpret it and do it wrong. So I only teach this to certain advanced traders that actually understand to see when it's a retracement and when it's an actual reversal. So basically, like right here, after seeing this move, me personally, I would see this as a retracement because of just the way that it looked, how it came down. It kind of slowed up a little bit right here. So I would wait for it to come up, and then I would have like a sell limit right here, and then my stop loss would be somewhere like, I think my sweet spot's like about 500 pips. So basically, the way that I would do it And this might be overwhelming to you, but I'm just going to show you like a quick example of what I would do. I would have like a sell limit right there.
So you're technically like that most the closest EMA.
Exactly. The closest or the second one, depending on how wide they are. If they're really close, then I'll put it at the second one. If not,
Okay.
then I'll put them at the first one. So you can see right here, it tested it, and then it pretty much bounces around before it comes back down like that. And then I would just keep stacking positions on top of that as well. So like it comes back up right here again. Yeah, so you can see it comes back below, it dips below, then it pulls back again right here. So I would have like another sell limit like right there. And then, like I mentioned, my sweet spot's about 500 pips for scalping. And then I just let it run and then it hits there again. So within those two like entries right there, I would have hit like 1,000 pips. And then I would probably hit it maybe 2 or 3 times. After that, I'd probably just give it a break because it only does that so many times before it ends up, reversing on you.
Okay, that's interesting because
Yeah.
I've never actually used I guess like the sell limits and buy stops and stuff like that. But that would be interesting to use because I actually before doing like looking into the K2 strategies, I normally trade. I do use EMAs, and a lot of times I'll just kind of treat them as support and resistance.
Oh yeah, no, definitely.
So this definitely is something that I probably would look into.
Yeah, definitely. So like if you trade Fibonacci's, I don't trade Fibonacci, so I didn't realize that they kind of lined up. But if you trade
Yeah,
Fibonacci,
I use Fibonacci's too.
oh, perfect. Yeah. So these are like dynamic Fibonacci's because one of the guys in the group, he like loves Fibonacci's. And he was telling me like, hey, your K2 pivots line up exactly with the Fibonacci's. And I was like, what do you mean? And he was saying that like if you drew Fibonacci's, these pivots would line up exactly where like, I guess,
Oh, yeah, I could see that. Wow.
yeah. So it lines up perfectly. So instead of you having to draw those Fibonacci's, you literally just have this move along with you as price moves and it just automatically adjusts as you go.
Wow. Wow. Because I could actually like picture if a Fibonacci was drawn, and they definitely look like they're like coming back and hitting those areas.
Exactly. Yeah. You see the drop here, it retraces back to here. I guess like the 60 or the 30. I'm not sure because I don't trade it. And then you just see it drop from there. So that'd be another way to look at it, depending on how you trade, because everyone trades differently.
Right.
And it's always interesting to see how other people analyze it when I didn't even realize that, it lines up together.
Yeah, that is interesting. Because I really do like using the fib, so that's definitely something I'll be looking at now.
Oh yeah, exactly. And there's there's a ton of ways to apply the K2 strategies that I don't even teach. They're just ways that I know how to, apply them. Like, I don't know if you looked at the momentum pullback strategy.
Yeah, I did.
Yeah, so that one works too, but the problem with that is you have to find like an overall trend. And the way that the market's working, the trend's not just you're not gonna catch overall trends very often because you can see here it's just neutral. But
Right.
if you're using, so say if you're using the pivots as a trend, right? Because you're scalping obviously. So you don't really need to see what the trend is like an hour from now, 2 hours from now, 4 hours from now. You just want to see what the trend is right then and there. So you can also use the momentum indicator. And when you see like a retracement, like you see price come up this way, because you know how you would trade the Fibonacci's, you wait for it to reach a certain area.
Right.
Instead of entering like a sell limit here, you could also enter a sell stop right here. I mean, there's like 2 different areas of entry. Like you could have entered the sell limit here to enter that, or you could have entered a sell stop right here at the low of this opposite candle, because basically if price is trending down and you get an opposite signal, it's just going to indicate like a retracement. It's not necessarily going to indicate that price is reversing. It's just indicating that price is going against the trend temporarily, but then it's due to come right back down. So if you were to put your your sell stop right here at the low, as soon as it comes right back down, it would automatically fill your order and then go straight down to TP. So there's a ton of ways to apply it.
So I do have a question because I've never really used the limits and stops. What's the difference between, say, a sell limit and a sell stop?
Gosh, okay, cool. So that's a good question. A lot of people get mixed up with that. So say if you're trying to enter a sell, right? Like where price currently is, if you're trying to enter up here, like how I was mentioning, if you're waiting for it to reach the pivots, you would enter a sell limit. So in order to enter a sell order, but price is below your entry point, it would be a sell limit. So as price reaches this point, it automatically fills your order. vice versa, if you're trying to enter a sell stop and your entry's down here, or I mean, if you're trying to enter a sell, so either direction, if you're trying to enter a sell, if price is below, then it would be a sell limit. If price is above it, then it would be a sell stop. And the difference for that is a limit means that it guarantees that price. So it guarantees the same exact price that you put up here versus a sell stop, as if price just touches it or passes through it, then it automatically fills it in that direction as well. So it works the same way for buys and for sells. It just depends on where price currently is and where your future is from there.
Okay, that makes sense.
Yeah, some people like to use limits because you get in at that same exact price. Like it's like, say if you want to get in right here at like 3,000 or 30,115. If you want to get in at that same exact price, you'd have to use a limit. If you're using a sell stop, then if your spread is like 10 pips off, right? Say your like price is up here. Yeah, move this over here. So say price is like up here, but then your price is different because of the spread. There's like a difference there.
Mm-hmm.
It would still fill your order even though it doesn't come touch it.
Oh, okay.
So it's a little it's like a little thing that a lot of people don't realize, and it doesn't really make a big difference, but for some people it makes a big difference because sometimes price will be like way down here or way up here, and their entry is going to be like way down here, and then sometimes we'll place an order and everyone's order didn't fill except for that one person because their spread was
Right.
so they're like, we always get this question in the chat sometimes too, where people don't understand why that happens, but it's mostly because of the spread. So depending on what broker you're using, your spread might be wide, it might be tight. It just really depends on everyone's personal broker.
Gotcha. What was I gonna ask? I guess can you do like a demonstration of you, I guess like using this scalp strategy on the 10-minute?
Yeah, sure. Like the pivot strategy.
Yeah.
Okay, perfect. Yeah. So I'll put the requirements here so that you can be reminded. This K² pivots scalping strategy on the 10-minute. And then for one, you're just going to identify trend using K² pivots. 2, you're going to identify retracement. 3, identify rejection of K² pivots area. And lastly, you can confirm valid K² signal. And after that, you can enter on the open of the following candle. And lastly, your stop loss will be stop loss at previous swing or pivot 3-4. So pivot 3-4 is just the farthest pivots. Like if you're looking at it from here, it would either be the orange or the red one generally.
Okay.
It just depends because when you're placing your stop loss, like everyone scalps differently. Some people want to put it at their swing. So this wouldn't be an entry here, but I'm just using for example. This would be about 600 or 700 pips. And then for some people, this might be a little too high, like 9 or
Yeah.
like so it really depends on the person because for scalping, everyone trades differently. Like some people can stomach a bigger loss, while some people just want to go for that quick, like 500 pips or 300 pips, etc., like that. But let's see if there's an entry over here. So I think we would have a sell coming up soon. No, it looks like prices swinging up. This wouldn't, or maybe it would. Let's see if we have a sell coming up soon. So this is kind of iffy right here because the thing is, you saw how we were looking at price from back here, right? So if you're watching this from over here, you would still understand that it's still in a downtrend. It's just retracing back, but then it's coming right back down. If you were just looking at just from right here without seeing what happened back here, then you probably wouldn't have spotted this right here. Because if you look at the trend at this point, it doesn't really look like it's trending down anymore. Do you get what I'm saying?
Yeah.
Yeah. So in this situation here, I probably would have maybe taken this one. So right here, this is where it gets a little tricky too, because you can see that the swing is not that high. The swing is only about 300 pips, and looks like the spread is about like I don't know how it is on here because it just says 4. I'm not sure if it's 300 or it's like 400 because on Hugo's way, I think the spread is normally like around 300 to 500 depending on like how volatility is. So if the market's slow, it's going to be higher. Like if you're trading in the Asian session, the spread's going to be higher. If you trade during the US session, it's going to be maybe about 100 to 300. So this would be too close here depending on what broker you're using, because you'd have to cover the spread. So you might have to push that up a little higher. So instead of putting it at the swing right here, I might have put it somewhere, maybe like right there, 600. It just really depends on, or this is a trick that I do. I usually just zoom out from here. I'll use the short tool and I'll let TradingView do it for me. Because then what it does is TradingView will calculate the swing, which would be right here. And then it will, it'll incorporate the ATR, which is the average true range. Right. So that way, this is going to be like the last area of push. So if it pushes right here, then it's probably going to reverse and continue higher. So when I'm confused about where I want to put my stop loss, I usually just let TradingView do it for me because they're pretty spot on with it. So let's go over the requirements here. So first, you want to identify the trend using the K2 pivots. Like I mentioned earlier, when price is below the pivots are angling down and they're spread out. That's going to indicate a downtrend. Right here, price was just pulling back. But since we were analyzing this from back here, we can still confirm that it was still in a downtrend because it never swapped up and swung into an uptrend. So right here, we'd say that the first requirement's been met. The second requirement right here, you can see price come straight down from here. So this is going to be subjective because some people will think this is the low. Some people will think this is the low. Some people might think it came up here and then it retraced back down here. But if you look at it from a bigger perspective and just avoid all this noise, you could pretty much see that this was the high up here. Then it went from here down to here where it established a low. And then there was some noise here. So I mean, you could also consider this as a retracement as well. But just looking at the bigger picture, I would anticipate this as the high, the low, and then price retraced from this point up to here, either here or over here. And then from this point, you can see that this would be the rejection. So the requirement one's been met because we've identified a downtrend. For requirement 2, we've identified the retracement here because price came down for a downtrend, retraced up from this point. And then we had requirement number 3 of rejection. A rejection could have been either right here or it could have been right here, anywhere within this area, because you can see price reject from this point, and then it's followed by a sell signal. So requirement 1, 2, and 3 have been met. The last requirement is to confirm a valid K2 signal. So right here, we have a valid sell signal. So this qualifies as a pivot entry. Once you have that right there, you can enter right here on the open of the falling candle. And you can place your stop loss, like I mentioned, either at the previous swing or at the last 2 pivots. But since the pivots are too close and the swing's too close, I just use TradingView as a function to do it for me. So it set it up right here for about 90 pips. This is kind of a big scalp because if you're going for 900 pips, I guess, this is kind of a big move. It wouldn't be, really considered a scalp. So I would set like a T, like some here, maybe at like 500 pips or something.
Okay.
I would, you want to get in and out of the trades like really quickly. So I would keep that in mind. It's not necessary because let's see if we run this and see how it plays out. So if we run this here, it looks like it would have hit it anyways. So that's why I use you can see how like accurate the TradingView measuring is, because it pushes it far back enough where it knows that's like the end point. Like if it passes here, then it's probably going to reverse, but it pushed it far enough where it kind of knew that it wouldn't reach that point.
Okay, I have a question. So I know that in the videos you mentioned the rejection of the pivots. I remember you did a demonstration and you said we wouldn't have gotten one because I guess like it pulled back too far. What determines that it's too far back?
Yeah, so if it's too far, let me see if I can find an example here, because
I thought it might have been just because it got past the lines, but I see it kind of did. on the one that you would have just taken, but we still took it. So I'm just trying to decipher what is actually too far out.
Yeah. So too far would probably be when I would probably measure it, and I would probably go maybe 2 times the spread. So the spread right here is like 300 pips. So
Okay.
if it goes farther than that, so right here's the last pivot, right? If you measure it right here, this is about 300. So it's or maybe just one and a half of the spread, because you could
Okay.
kind of just eyeball it to see where it's too far. Like something like this right here. This is way too far past the pivot, where
Yeah.
price cuts, or right here. So you see how price cuts like way up here.
Mm-hmm.
This would be way too high. So there's no like sweet spot, but I kind of just eyeball it. So if it pushes like way
Eyeball.
far up here, this is like a 600 pip, push in the opposite direction. If that happens, then I probably wouldn't take it. If it's something where it's kind of close, like, let me look for an example here. Like something like this is too far because it's already passed, like way past it.
Mm-hmm.
But it's something that you kind of have to develop like an eye for, just like in
Oh,
practice. Sometimes it's see, is the price trending up? This would be okay because this is not that far from the pivots when
okay.
it pulls down. This is only about like 200 pips. It's not too much, but this would be too far right here because price comes like way down here. Let me see this. Yeah, price comes from these pivots right here. This is like a 600 pip move. So that's kind of what I mean about double the spread or maybe one and a half the spread.
Okay. I also noticed that I think it was one of the scalps that usually go for a 1-to-1 ratio. Is that usually like standard for what you go for with these scalps?
Yeah, normally it's like 1-to-1, but most of the time when I'm scalping, I don't let it, like I don't just let it run. Like this right here, I wouldn't have let this run. I would have watched it, and then as it came down, I'm like manually entering and exiting the trade. Because sometimes when I scalp, I don't use a stop loss because I'm literally
Right.
just trying to catch like little moves, kind of similar to what I meant right here when price comes up and tests the pivot.
Mm-hmm.
So like right here, I would just enter the trade, exit it as it comes up. I just like manually hit like buy, sell,
Okay.
just to get out of the trades. But that's like something that you also kind of develop, with practice, because the more and more you stare at the charts, you're going to see these patterns in your head without even really thinking about it. Like with these trades right here, I didn't even think about, entering any of these. I kind of just took a glance at it. And since I'm so used to identifying certain things, I would be able to just, look at it and pick a trade like really quick. Like this right here, I probably wouldn't have taken this because there's actually another entry right here, but I wouldn't have taken this one because this one's way too far out.
Mm-hmm.
You see?
Yeah.
So right here, price broke the pivot right here. So the price broke the pivot from like way over here. So this was like a 600. So it's like the same number that I mentioned earlier. It's about 2 times the spread, 700 pips. So if you compare this to this little push out
Right.
from this little push, this is only about, less than 200 pips. So comparing 200 pips to like 600, 700 pips over here, it's a huge difference.
Yeah.
Yeah.
Oh, I noticed too how certain strategies use the trend meter and certain ones don't. Is there a reason for that?
So if you're using the intraday strategy, that you're basically looking for a longer term trend for
Right.
those, because you're pretty much just waiting for it to like pull back and then take that trade. And for the intraday strategy, you're applying it like on the higher time frame. So just depending on what you want to use. The thing with the K2 indicators is that they all kind of complement each other. Like the pivots will indicate the shorter term trend. So if you're trading on the 10-minute, it's just going to give you the trend on the 10-minute. But if you're using the trend meter, like say if you want to be extra careful, like super duper careful, then you could use the trend meter as well. So for this, you can change the time frames as well to the shorter ones. But you'll see that if you use too many indicators at once, you're going to miss out on a lot of good trades, like something like this right here. If you're looking for the trend, but then the trend meter is blue down here, it might make you think not to take the trade. So it just depends on what you're looking for. So if you're applying one of the strategies that requires a trend meter, they all kind of like balance out. Sometimes they're the same thing. So let me see if I can change this here. Because are you talking about the scalping strategy with the trend meter, or are you talking about the intraday strategy?
Intraday.
Intraday, okay, so the intraday is going to be way different because for the intraday we have the settings to the full day. So even though we saw these entries right here, you would have probably avoided these entries because it wouldn't match with the trend meter down here. So it just depends.
Right.
Exactly. So it depends. If you're scalping, then you probably wouldn't use the trend meter
Okay.
because it's not relevant for looking at the overall trend, but you
Mm-hmm.
can. So say if you're taking these scalps over here, if you wanted to take these scalps and you're just like, oh, I can't lose this trade, like I got to be 100% with this specific one, like your next trade that you're going to take. So in that situation, you just be applying the pivot strategy. But if you want to be extra careful, you can turn on the trend meter and you're like, oh, it's trending heavy, like on the overall.
Oh,
Um,
okay. Yeah, that makes sense.
so it would be in addition to your strategy, but it's not necessarily
Not needed.
required.
Okay.
Yeah.
Could we
You can do
also
that.
go over? I'm sorry. What did you say?
Oh no, go ahead, go ahead, go ahead.
Oh, I was gonna say, can we also go over one on a higher time frame? Because I'm more so, you know, I'm more so trade off the like 5 and 15. Of course, I look at the higher time frames, but those are usually like where I'm getting my entries. But I do want to start trying to get in a habit of holding trades longer because I've always been pretty uncomfortable doing that. So I definitely want to start using that strategy, getting those better um, trades I can just like hold over a longer period of time.
Oh yeah, no, definitely. So I think the best one would be, well, the one that I use for long-term trades, or not really long-term, but my intraday into like sort of swing trading would be the K² SR zone trading strategy. So for that one, I trade on the 4 hour, but I wouldn't trade US 30 on the 4 hour
Yeah.
because the movements are just way too crazy. Like they're like 10,000 pip movements.
Right.
So US
I like
30, I necessarily, oh,
no,
go ahead, go ahead. What were you saying?
and I like GJ, so I probably would use that for probably like GJ.
Yeah, definitely. So for like GJ over here, basically to apply the K2SR strategy, the first thing you would do is you would identify the zones. So are you familiar with drawing up the zones?
Yeah, I haven't tried the actual indicator for it, but I usually just like draw them on my own.
Okay, yeah. So basically what I would do first, you can draw your own or you can draw the K2SR. It's up to you, just depending on how um, how comfortable you are with drawing your own.
Mhm.
Because some people they're just some people end up drawing like zones in the wrong places, and that used to
Yeah.
be my problem too. And that's why I created this indicator, because I wanted to be exact. Because the thing is, when you're drawing it on your own, it's kind of hard to see what goes on like like way back in time.
Right.
But
Right.
with the indicator, it pretty much automatically computes all that data, so that you don't have to go back way back just to get these zones on the chart. So yeah, basically I would draw the zones first, and then after I draw the zones, then I would try to figure out where the momentum is moving. So the main gist of this strategy is basically that price pretty much goes from zone to zone. And
Mm-hmm.
if you draw the zones out and you just go back in time, you can see that price always comes back and retests these areas, especially for the Forex market, because the Forex market has so much data where you can see that the same exact price point that's being tested today was tested way back in September, June, May, all the way up until like 2018 and 2017. So you can see that these zones are actually like, actual important zones. They're not just like random support resistances. Because the thing is, you can draw support resistance like anywhere, and it'll look like a support resistance. But in order for you to determine if it's like legit or not, you'd have to go back like super far in data to see where it actually tested. But yeah, going back to the strategy, after you draw the zones, then you will have the momentum indicator. And basically what you're doing here is you're just trying to catch the waves, like the waves of price. Because generally when you have a momentum pushing in one direction and then you see price break a structure, from there, it generally goes and pushes on to, the next structure before it rejects off it. Then you get
Mm-hmm.
the momentum swinging the other direction. And then it pretty much goes from, this structure to pretty much this structure
Right.
before it ends up going back in the other direction. So when you're trading from zone to zone, you're basically just piggybacking the rides, because these movements are getting made by the banks and institutions and stuff. They pretty much set the direction, and what we're doing is we're pretty much just piggybacking the ride up until the next zone, and then it reaches the next zone, we hop off. We if we decide to hop back on, we hop onto the next zone, and we pretty much just do it over and over again. But it's really simple. So I'll just put the requirements over here. This is the K2SR zone trading strategy on the 4-hour. So first, you're just gonna identify a break and close past K2SR level. Number 2, confirm direction of momentum using K2TS indicator. And then lastly, you're going to enter open the following candle. And the thing with this strategy is that it lines up with the pivot strategy as well, like a lot of times too. So if you're applying the pivot strategy, you can kind of see where entries can line up. Like right here, price is trending up, and then you got a buy signal right here. You probably would have taken this right here, and then it would have lined up with a pivot entry right here, and then also a K2SR entry right there as well. So that'd be a pivot entry, and it'd also be a zone entry as well, because price broke the structure. You could have taken this up if you're using the pivot strategy. It would have lined up as well, and it would have been the same exact entry. So you can use that as another confirmation too. A lot of people like to just have the pivots on the side, and then when they take a trade, they just turn it on to see if they're trading in the proper direction. So that's one thing to use there. But yeah, going back to the requirements over here, this is pretty much it. This is all you really need.
Yeah, this one seems pretty simple.
Yeah, it's super simple. Like it's funny because a lot of people overcomplicate it. Like they see these requirements, and they always ask me like, "Oh, do I need to like add something else to it?" And I'm like, "No," because if you add too much stuff to it, you're gonna end up missing out on a lot of good trades. Because a lot of people, they end up adding too many things. Like I see people that have like 5, 7 indicators on their chart, and then they're like trying to match everything up. And I'm like, dude, you're never gonna get any entries.
Right.
They're never gonna line up, And then when they do line up, you still have a 50% chance. Like there's no guarantee it's gonna hit.
Right.
So I try to keep it as simple as possible. But yeah, looking at the strategy.
It's like too many indicators sometimes just get me all messed up. I try to have my charts pretty clean for the most part.
Yeah, definitely. That's the same with me too, because I mean, even this is kind of messy, but if you just take off the momentum indicator, it cleans it up a whole lot.
Yeah, that'd be like pretty good for me to read.
Yeah, definitely. Because you can do that too. This is pretty much how I do. I usually, because I don't really need the indicators, I just use it to show you guys a visual of, what I'm looking at. But I could pretty much see what's on here without actually having it on there. Because I'm, obviously I created the indicator, so I know what to look for when I see these momentum swings in the market. So I'll show you a quick example of this strategy right here, where we waited for that break and close. So we already looked at, I was not loading. Yeah, so we already looked at this one right here. I'll just show you, I'll show you this one right here, for example. So we got this one right here. This obviously would have been a win. And then again, right here, we'll just look for the first requirement. First, you want to identify break and close past the K2SR level. So right here, you can see price in this structure down here. It broke this structure right here. Then it closed above it, right? This green one. So once that happens, your first requirement's been met. Your second requirement is going to be to confirm the direction of momentum. So in order to do that, you just want to make sure that the last signal is a buy signal if you're looking for a buy. Vice versa, if you're looking for a sell, you want to make sure that if price broke this structure here, you want to make sure that the last signal was a sell, indicating that momentum is going in that direction.
Okay.
Because generally, if you see this right here, this is just going to indicate that, price is probably going to go from this point up until this structure right here. And then from there, it can go even higher, or it can reject off it. So once you have, the first two requirements met, where you've confirmed the break and close, and then you confirmed the signal, then you're pretty much good to go. That's all you got to do. So at that point, you can enter on the open of the falling candle. So right here, we enter a long position, and we try to reach the next zone right here. Sometimes I like to leave a little space, so not right to the zone because you want to cover the spread. So instead of having 55 pips, I'd probably bring it down to maybe 50 pips.
Okay.
And then I put the stop loss about the same amount away. But for this, obviously we're still, since we're trading on the higher time frame, we're going to want to move our stop loss and profit as it continues up.
Right.
So right here, depending on how conservative you want to be, I usually give like 2 TPs, but you can also just use one, like at the 50% mark.
Mm-hmm.
And then once it reaches there, you can move your stop loss there. But for me, since a lot of people in the group trade with like smaller accounts, I try to set 2 TPs there so they have something to look out for. Because some people, they don't want to risk going way too high, so that's why I set like 2 TPs there. But me personally, I think 1 TP is perfectly fine. It's just I just be careful for like a lot of the other members in the group that I like. My main goal is to make sure everyone doesn't blow their account, because that's like I feel like that's everyone's biggest problem. Like they don't know how to manage risk, so I try to make it like as careful and as simple as possible. So like right here, pretty much that would be the entry. You pretty much let it run, and there you go. It hits full TP.
Right.
So that's pretty much how you do it. And the thing that I like about the 4-hour candle is that it closes at the same time every day. So I'm pretty much on a schedule. I'm not on the computer like 24/7. I'm only on the computer whenever the 4-hour candle closes, and in the morning for the US 30 entry. So
When do you
I
usually trade US 30?
I trade US 30 during the New York Stock Exchange. So it opens at 6:30 a.m. Pacific Standard Time. And
Yeah,
then,
it's 9 my time.
oh, it's 9. Oh, because you're on the East Coast, right?
Yeah.
Okay, gotcha. Yeah. So yeah, 9 year time, about 9:30. That's when the market opens. And then we pretty much just take that first signal after the market open. So I'm usually trading that, and I'm on live from like 6:30 my time until about 10 or 11, because that's when the last 4-hour candle closes. So the 4-hour candle closes at 6. That's usually where I send out the first Forex signal, and then I go on for US 30, and then I usually stay on until 10 when the next 4-hour candle closes. And then once that's all done, I pretty much go on with my day. Then I come back for the night session to trade Asia, like from 6 p.m. to 10 p.m. So you don't really have to be on the computer all day if you get good at trading the 4-hour.
Yeah, I'm gonna be back testing a lot this weekend. I'm excited to actually like put it to work though.
Oh yeah, definitely. Yeah, I think yeah. So if you want to trade exactly how I do and have the same results, the main things that you should probably look at would be the K2SR strategy, because this is the only strategy I use for Forex now. I used to use it intraday, but I hated being on the computer like 24/7. It kind
Yeah,
of it just takes a toll on your like your health if you're on the screen all day.
right.
So it still works. The intraday strategy works perfectly fine. It's just that I don't really want to be on the computer all day. So that's the main factor there.
Mm-hmm. Okay. I appreciate you taking your time and doing the one-on-one. It definitely
Yeah,
cleared
no
up some
problem.
things that had a little bit of confusion on.
Yeah, definitely. No, usually this is all that people need. You just need like one session with me or a couple sessions, and it clears up pretty much everything. Because in reality, the strategies are really simple. It's like a checklist. But
Yeah.
I feel like a lot of people want to overcomplicate it, because a lot of people come from a different course or a different mentor, and they teach them to do all these like so many different things that are like really unnecessary. So when they come here and they're like, "Are you sure this is it? Is this all I have to look for?"
Yeah, right. Yeah.
Yeah,
I definitely like this strategy. It seems pretty simple, like you said, checklist, and then just go from there.
yeah, definitely, yeah. But yeah, if you have any other questions, feel free. We could always hop on another session.
Okay, cool. I appreciate it. Thank you so much.
Yeah, definitely, no problem. All right, thanks. Have a good weekend.
You too.
Yeah.